Hello, I'm Gilbert Clark. I'm the Executive Director of and Chairman of Meridian Mining. We are a Brazilian copper, gold, silver resource development company in Brazil. We will own the 100% of the Cabaçal VMS camp. We have a what we think is an emerging world-class asset that we're now going through the process of confirming.
It is world class. There's no debate. but I thought we'd catch up. Hey, look, you're in London. I normally speak to you. You're down in sunny France. You're over here for Mines and Money. How's it going over there?
No, it's been quite good. I've been at drinks and so forth the last couple of days, and I've had an enormous amount of people come up to me and say, "Oh, wow, how are you going? I'm a shareholder." So okay, I don't know you, but thanks. Please stay.
That's fine. And in terms of the types of people who are showing up, because we have this Omicron thing, the last few days, is the attendance is good? Investors are actually showing, industry's showing.
No, we've seen some of the European guys have, the government's saying, "Ooh, careful." But the Canadians are here, the Australians are here. There's been a good contingent of people flown in over Sunday, Monday. No, it's actually quite good down on the floor. We've had a lot of people come up to us. Yeah.
Brilliant. Yeah, no, I think we need to all get back to it as safely as we possibly can. But deals get done face to face, especially this one is an industry conference.
Absolutely.
You've also got a big shiny rock in front of you.
Yes.
And I think let's just hold it up. Let's hold it up because then we're gonna have a chat about it.
We'll put this on the Twitter afterwards.
Go on, there's the camera
over there. What this is actually from Gilson. He was the chief geologist, and it was a sample. It was a sample of the Cabaçal. This is what the BP were mining back in 1987 to 91. And it goes 111 grams ton gold and 5% copper. This high-grade gold structure that overprints the Cabaçal VMS fictions, we've kind of defined this now over 2 kilometres. And this, what we announced actually this week, was richer. So the continuation of the mineralisation extends out of the mine. And we're now just going through a process of drilling it out. It's open. It's actually really exciting for everyone.
And you've raised a bit of money recently as well.
Yes, we did a good raising. We've actually gone through that stage where typical junior company raising 7.5 cents full warrant, and then the next raising was at 20 cents with a half warrant, and this one was a marketed deal. We had a lead order at I think it was 70 cents, and we opened it on Tuesday morning, pre-opening. Announced it to the market, and we closed it on the Wednesday morning, pre-opening. So, done.
So how much was it? What's the total quantity?
We raised in total 10.4 million.
Okay.
So no warrant, no broker warrants, fees to the banks. We had great support from Beacon, who led that for us, PI, Cormark, and of course, my bank is CIBC.
Fantastic. Okay. So a lot of interest, which was interesting because precious metals have not done well this year. There've been a few raises here and there, but I say the structures are a little bit rich in places. You found it easy, so I'm assuming a lot more institutional, or is it still a decent wedge of retail?
We had actually a good wedge of institutions come through, some high net worths. The board all wrote checks, as we always do. We actually bought our equity. We don't have that 1 cent seed sweat equity. We bought our equity.
Okay.
And I think what reflects in that raising, I got to check, but I think we've had 6 continuous quarters of market cap growth and share price growth, which I don't think any other junior has done. We're very, it's a special situation. Okay, It's not a one-trick pony. This is something very large, at surface, high grade, and it's what the mid-tiers, and some of the majors commenced with. They commenced with these very large assets, very low cost, very high grade, just standard bread and butter commodities.
Right. So again, for people new to this story, give us the kind of 1 minute overview of what you've bought into, what you think you've got, and what you've done this year. Because I think what you started off thinking you had has turned into something else.
A lot bigger, actually.
A little bit bigger,
so what we had is a geological asset that had been hidden in the archives of a major, Rio Tinto, and then they sold it and went into an underfunded Brazilian company, and they sort of scratched the surfaces. And then we acquired it, and at the start of the year we had a zone of about 500 metres in strike, and that was the Cabaçal mine. We knew there was good mineralisation there, and we've tripled that. So now, well, actually more than triple, 4 times it, we're up to 2,000 metres. So we've sort of bang forth, and that's just one of our assets. And going through the historical exploration data, the drilling, the geophysics, the soils, I think we've got about 7 hydrothermal centres. These are the typical where VMS mineralisation occurs. And like we announced one just, I think, 2 weeks ago, C2A target. There's 2 VMS sequences there. I think the cumulative meterage on those is about 2.7 kilometres of additional mineralisation at surface. So we've all become accustomed to these, underground mines that need to be great, high grade, very high grades, high capex, high opex. And why we've become focused on that, this is our generation of investors, is because in the 1980s, 1990s, all that shallow, low opex, low capex, open pit dirt got exhausted. And here we have this entire belt. It's quite a big belt. And all of the low cap stuff's still there. It's fantastic.
It is. So I'm intrigued about how you go about unlocking that next year. You've raised $10 million, which, okay, compared to where you're at, that's a good chunk of change. It allows you to move things forward, and then you'll go and raise some more money. How do you expedite things? How do you keep hitting numbers like this?
Yeah.
How do you get cheaper money into the system? Because if you're talking about a district, you either need to come out of that hard and fast, or someone else is going to come in and help you out with their balance sheets. How are you going to approach it?
What's interesting about the last couple of months, we've been pumping out 49 metres, 4%, 2%, 4 grams, 2 grams, whatever, 10 grams, gold plus copper. And that's just one of the veins, okay? We've just followed one. And we know that there's about 150 metres of cross strike where the BP guys were mining these veins. So we're just going to keep infilling, proving up more and more resources.
Mm-hmm. Where are you at now? How much?
Resources?
Yeah.
We've got an historical resource of about 20 million tonnes at about 0.6 copper, 0.6 gold.
Right.
But that's an historical figure. And how they actually calculated that was just so inferior. It was such an undercall.
Right.
And we're going to...
It's also a very different project with those grades.
Yeah, no. They were envisaging a very small open pit. And what we're envisaging is quite a large open pit. And in our scoping study, we're targeting a 2.5 million tonne per annum mill. It's a big mill. It's a big mine.
That is. So how do you how much of that historic can you use? Because people want you to put out a resource. That's how people measure you, right? And how quickly you do that, it's down to you. But again, you need to put a stake in the sand at some point. So what are you working towards? We're
working towards second quarter next year to get our first resource statement. Okay. But one of our great problems is you don't, with junior companies, make this consecutive mistake. Always do it. Let's get at it, rush it out. Yeah. And they haven't closed off their mineralisation. So we're 2 kilometres.
Well, you could argue the Aussies don't have that problem. They're fine with that.
No, you've got it. Yeah. But then how do you get your financing? How do you get your institutional investors to say, what's your quantum? What have you got? Well, At the moment, I've got, 2 kilometres by probably average thickness 60 metres by maybe 200 metres cross strike. It's a lot of dirt. So we have to continue to drill that out.
Okay, but you could be drilling for 10 years. So you've got a historic resource, right?
Absolutely.
So you say, right, that on the basis of that, we could utilize all of that and put something out. But the grades are so different from the stuff you're talking about now. So how do you go from that to something in the first half of next year, which gives people a sense of what you're about?
Yeah, that's a lot of the things we've been telegraphing to the market. So we're going to go into that resource. Pretty soon we'll close it off then anyway. We're seeing that we're going out of the copper system into the zinc system. So we know we're getting to the edge, especially in the northwest. We know we're going to and that might be another 300-400 metres. We don't know yet. But what we'll do is we'll calculate that resource. We started the scoping study last quarter. The reason we did start that scoping study is that would give us the guidelines to then launch into the PEA straight after. Right. So it comes third quarter next year, PEA bang. And it's largely going to be done already. So our timeframes are completely different to a junior company, a typical junior company, because I've got so much upside, so much defined upside that I can project when to engage.
So that's the bit that excites me and scares me in equal measure, right? Okay, so when people talk about accelerating processes, I get a little bit nervous, and I want to know the basis in which they can do that without having to cut corners, without having to obfuscate. So what's your process?
Well, we're dealing with data based from production. So we don't have that risk, because if you accelerate, you're taking a risk. You don't know what you're going to have. We know what our metallurgy is going to be. We know what our environmental criteria is going to be. We've actually just launched our EIA, and when that's completed, that's going to be bankable for feasibility study. So we know we're going to need that. Okay. And landowners, our ESCG, we've got our permits, our access agreements. We've been doing this for years. And one of the things you might have touched on there is what I call execution risk. How are you going to do it? What is your team capable of doing it? Did you just bring the team together? No, this team's been together for years. So I don't have execution risk. That's why when I restructured the company, to make sure I could deploy capital professionally without risk, I kept my senior manager guys all together. I mean, it's all about managing risk.
Yeah, we talked about it previously, and people we'll put links below to the previous interviews because I think
it's good.
Great team. Yeah. I want to focus on the asset though, because I believe the team can deliver. The track records, are good. With this whole thing about 2022 looks like a resource coming out. Can you deliver a PEA in accelerated time frame? End of 2022, or we're looking beyond?
No, we'll get the PEA out before the end of 2022. Yeah, because a lot of the macro, like the flow sheet equipment, we're actually addressing that now within our scoping study.
Yeah.
So we know what we're going to need, and then the groups that we're actually working with, which we're kind of call it, we'll probably go into early contractor involvement in second quarter.
Yeah.
There's a couple of groups they'll tender. And these are the groups that actually recently built projects in mine. So they already know what their cost profile is going to be. We're not dealing with any new technologies. It's just Nelson cyclones and flotation cells. There's no rocket science here.
Right. Okay. So all simple stuff, roughly low OPEX. But you've got a resource, let's say first half, and a PEA on one of your projects. One. You're talking about district here and lots of optionality.
Absolutely.
And you're going to be exploring some of those other targets and assets as well. Do you then park up asset number one, get a couple of these lined up, or do you accelerate into, because you've got a team that can build mines. Okay, that's quite good.
Yeah. No, what you've got to look at then is the overall option agreement. Because in that option agreement, which gives us 100% ownership, we've got to focus and build that mine, that one Cabaçal.
Number one priority.
So that's the number one priority. Okay. So I've got all that upside, and I'm allowing capital to be deployed there, but my focus is on that, fulfilling that option agreement.
So you don't have to do that little dance of trying to make yourself look a little bit sexier and exciting because you need someone to come in with a balance sheet or take over or buy you or an option. You're getting into production, which will capitalize the company to be able to do the district-wide
later
exploitation and value creation.
Integration.
That's the big idea.
Absolutely. And we're starting off with a scoping study at 2.5 million tonnes per annum mill. We've got another open pit 3 kilometres to the northwest, potentially, one to the southeast. So then you can say, okay, we can upscale the mill to maybe three and a half. It's a big... Well, actually, one of the interesting things that some people wouldn't have addressed when it came out of the scoping study is how we're going to manage tailings. So typically it's always the wet tailings.
In Brazil, not
going to happen. One reason, basically it comes down to permitting and economics. Because we're so flat, the terrain, the civil works to do the tailings dam is going to be, probably north of 30 million US. But we're not going to do that. We're going to go to dry stack tailings and then incorporate that into the waste dumps.
Okay. And that's been done there, in the region before?
I don't know.
It's a little bit wet.
I don't know if it's been done in Brazil before, but dry stack tailings are, if you're in Brazil and you've got a new project, forget about doing a wet tailings dam. It's not going to happen.
No, absolutely.
And by doing this, it incorporates that. We'll have like a sulphide. If we have a sulphide tailings waste concentrate, we'll put that in there, so that's mitigated. No, this is the way forward. It's essentially for Brazil. They're not, these high terrain dams that collapse. They're topographics. It's terrible. Our problem in Cabaçal is it's largely flat. So it was like to build a tailings dam for say a 10-year mine, which is what we use just to scope it. Ours is going to go for decades. It was 30 million. I think it was approximately 30 million US. So we drop our capex by say 25 million. OPEX might go up by sub $1.
Right. Okay.
And the trade-off is the speed of the permitting.
Well, let's talk a little bit about Brazil. We had a Brazil panel on earlier in the week. It was up in the top charts, but it seems Brazil has come in and out of fashion a little bit. We not so long ago talking about the BRIC countries taking over the world, and then things happened. So it's back in fashion again. Yeah,
look, Brazil, I was just recently down there. It is booming in the countryside. And what we're seeing, what I think is really interesting for just any investor, is largely Peru and Chile one-trick pony economies. And some of the governments like to just suck out that cash for their programs. Brazil's a diversified economy. Okay, manufacturing, industry, mining, energy, financial services. So they've got such a broad economic base They got hammered like all countries did with COVID, their economy, but it's rebounded. And mining is a key industry in Brazil.
Okay, so if there's no execution risk, we know the asset's good because we've seen some great numbers coming out of it. You've got all that historic data with a massive historic resource, and some of the numbers you're yet to announce, you feel will be very encouraging. I can't remember the phrase you used at the beginning of this conversation, but you're excited. What are the issues? What are the long poles in the tent which you guys... Permitting, I guess you just said it was one in terms of the length. Not a case of when. It's a case not a case of if. It's a case of when. What else is there?
One of our concerns is always it's the as all countries are going through this, it's the energy transition risk.
Right.
Okay. You have to, if you're going to address institutional investors to grow your equities, which we are doing, you have to demonstrate that we've got a very low ETR. And that means there's two options for us there. We've got, I think, 3 hydroelectric dams within 30 kilometres.
Okay.
So we've got sustainable, clean grid. There's
and is that all year round?
Yeah, no, that's quite good there. They have some fluctuation. It's a very dry summer.
Yeah.
But generally, Brazil is always energy positive.
Okay.
We've also got the option of looking at run-of-river, which I really like run-of-river. That's an energy risk. We have to identify that. Human resource.
What's the cost?
Look, for run-of-river, I think you'd probably get away with somewhere between $4 to $5 million per megawatt hour.
Okay.
So the payback on that's it's longer, okay, than just getting, building 10 kilometres of transmission line. Building the company, we're going to go through a human risk, okay, that every junior company doesn't identify.
Meaning what?
You're going to have to grow not only your capacity in country, but your capacity at the executive level. I can't do everything. There will be executive growth, and we've got to make sure we bring in the key people. So if we're going to say, for instance, we're going to go into project finance, hopefully touch wood in the future. And I brought on a director recently, Susie Sesselman, she's got project finance experience. She's super on corporate governance. But that means if I was to just dump a team in a month before going into project finance, they knew nothing about the project or the timeframes, your human risk becomes execution risk.
Okay.
So you've got to build your human resource in a timely fashion. So when you need that skill set, it takes away any execution risk.
We're also talking at the moment a lot about the kind of supply chain inflation and all those sorts of associated, which maybe people throw various words, transitory, temporary, or as these things tend to do, is the costs stay up there. You at all concerned about how you manage that? I mean, you're walking into a PEA next year, so I guess you don't really have a sense of it at the moment. Brazil's got very high import tax, so they actually make a lot of their own stuff there, and we know who those manufacturers are. So supply to build these projects, you can actually do most of the sheet metal work in country at competitive international rates. On top of that, right?
We don't need any sort of funky chemical reagents to float the copper. So I don't have to worry about, do I have to import chemical reagents, because it's just, for all intensive purposes, the copper floats by itself. We just need a frother. So it's all those little things that can be add up. It's important.
It is important, and we've also, I think, talked a lot about, certainly the last 2-3 weeks, which is about companies having to adapt and adjust to a kind of brave new world out there. Not only are people talking ESG, which is obviously critical, and I'm to the point I'm not actually quite sure most people know what they're talking about, because they've got a different plan, and obviously the green narrative. You've mentioned hydroelectric there, but also things like just in time versus actually having to stockpile.
That's actually it's really interesting. One of the best mines I ever looked at was, I think, Pusami, which is an old Tucumpa mine, and what they had was, I really enjoyed it. And they integrated their logistics, so they knew what say we had a pump, and they knew that pump had so many hours of operation. They could actually forecast when that pump was going to fail, and then have a logistics schedule.
So just in time.
They would have it. No, they have it like they say. There's an allowance. They'd bring it in a month before.
Right, which in today's environment doesn't work.
Oh, if it's manufactured in Brazil, it's not a problem. So we use Brazilian manufactured equipment. We're
hearing something slightly different from Brazilian companies at the moment. We had a producer, developer, explorers on. Again, different states have different. Okay, I'll take that. But I hear what you're saying. But that would have been just in time technology. Right, we need this to arrive, the week before, the month before, just to help us through. It seems now we need that in stock in case something goes horribly wrong. Otherwise, we're down 2 or 3 months. We can't afford to be down 2 or 3 months. And I say importation's got limitations. Manufacturing, there's a time frame,
that's
right?
From my perspective, that'd be a managing fault. When we were operating the mines in Espegon, we actually had stockpiles of equipment.
That's what I'm saying.
We had, we knew we were going to need it, and so we stockpiled it. And if it was going to be needed in 6 months, we had it in 2 months.
Doesn't mean, but it's the kind of case of a balance between just in time and just in case.
Yeah, that's also managing your working capital, your stay in business capital. A lot of groups don't take that into connection.
Exactly. So and that's what I mean about this Brave New World. It's like you can be ridiculous and go too far on one side and say, well, actually, we've got 20 million on our balance sheet and stuff which we're stockpiling just in case something happens. That's nuts, clearly, versus managing your cash flow economically. So getting that balance is...
It's very, like I said, and again, that's part of the human resource. So if we're going to go into the mining situation, we're going to have to have a really good expanded financial team in Brazil that are industry guys. Our team has been there. Okay, well, this is a team that operated a small mine, and this is going to be a large one. So we've got that base nucleus of experience in Brazil. We're not bringing people in from Chile or Peru or anywhere else.
Let's go back to more of that, which is you've got $10 million bucks. Mm-hmm. You've told us broadly what you're going to be doing with Cabaçal, but when can we start to see more shiny things on desks from you? How are assays? How are assays out there?
We've actually had to change our assay protocol because the high grade gold, so much high grade gold.
Why is that? Is it more difficult somehow?
Well, the VMS system, which is a copper gold system, we're getting that with the 4-acid digest standard, not a problem. But these high printing they actually truncate the VMS. They are shot through with coarse gold, and it goes into the coarse gold reject. So now we're doing a metallic screen fire assay.
Right.
So by instance, when we first looked at this, we thought, this is that vein's going to go 0.5 kilo per ton, easy. And then we got the assay back, and it was like 60 grams per ton. I'm going, nah. So we telegraphed to the market, no, we're going to actually do specific coarse gold assaying on that, and the repeatability is important, of course.
Yeah, of course.
And it came back at 300 grams per ton, so it was 200 grams off, but. Now we know that whenever we see coarse gold, we use a fire screen assay on it.
Okay, that's really interesting.
We have to be dynamic. It was really super.
It gives you. I mean, there's some fascinating problems that you've got ahead of you. I mean, that's interesting. The specific high grade assaying, but you've got some fantastic problems ahead of you in terms of simple things like tailings, and how do you treat them. And what is there an inherent value in those at some further point down the line? And how quickly do you try you accelerate your program? I'm kind of.
Oh no, our program is. I told everyone go back to the release on the when we did the option agreement things, August 20 something last year, and you'll go through and there's a schedule there.
Yeah.
And that's the schedule I'm doing, and now I'm going to allocate the capital. And build the teams, or enlarge the teams to deploy that capital to meet that time frame. That's what we're going to do. And at the same time, we have an allowance of capital to go and test these other things. Yep, that's there, like we did a couple of weeks ago. Now, for the high-grade gold, this is really interesting for us because we've defined it at Cabaçal, okay? It was originally in the Cabaçal mine that was stepped out 750 metres to the north, and we've done 550 metres to the south. The golden soil continues past where we're currently drilling. It's not closed. I don't know if it's going to go how far that way and how far that way, but it's open system. And we know that north of us, we've got another copper gold series of VMS. So I think it's northwest, I think it's about maybe another 4 kilometres. There's another sequence of VMS that we're going to have to test. But fundamentally, we have to adhere by the option agreement and that inherent value. And when I look at this, I think, okay, look, we've now got this really super high grade trend.
Just in terms of that agreement, so you acquire 100% by when?
The last 100%, well...
Having done what?
The last payment is when we secure project finance. And that's a CapEx. It's 44 months.
Okay, I was about to say, you
2024, we're already getting the permits transferred into our company's name.
Right.
We've got I think mid this year, we're going to go through our compliance of data. That's
Right.
a payment to them.
Yeah.
Then we've got shares that we're going to them. And at each milestone of, say,
Yeah.
when we do the PEA, they get a payment. Each validation of value, they get a payment.
Got it. And with FID is there's no quantum set in terms of you can make this bigger or small as you want, but by a certain time frame, you must have got the money in place and be able to make the decision to move forward. Right. Okay. So you're in. I'm just trying to work out how many. Where can you slip and fall over?
What's really important about this process? If we actually can control the destiny, we control the schedule, because within that option agreement, we've also got. Hey, look, there's been a statutory delay here,
right?
So we can extend out that part.
Have you done that yet?
No, we've been meeting all our time, so.
Okay.
But if there's like a COVID shuts down for 6 months,
some companies have called for things like that, and said, but you haven't taken the opportunity to do that. You haven't needed to.
No, we've had such good protocols of working that we've achieved since our first interview this year. We've rolled out a drill program. We've done, I think, nearly 11,000 meters of drilling, so 10% more. We've just announced we're extending it by another 15,000 meters of drilling, essentially just to complete the certification of the historical data, but it's just to infill that entire high-grade zone to the northwest and the one to the southeast. So we're kicking off our metallurgical studies. And I've brought in the guys that I've worked with. So I'm not taking, do I know this person? Is he quantified? Is he good? So we're bringing a Brazilian expert on grinding, who's worked with one of our guys, with Victor. Our flow sheet for flotation and gravity, I'm using my guys that I've used before, and going to go with probably the Canadian group. And I mean, when you bring in the brains trust of Falconbridge, who did their concentrate sales and their flotation, you're dealing with really clever guys. So it's important for me when I go to the market, the people that I'm engaging to produce factual results, I know them. And so I don't have that sort of, do I know this? Can I trust this person? Is there a risk there? No, I can put the money into this group. I know that those technicians in that flotation group have been working together for 30 years, so I can get the best out of Canada. And I can say, oh, here you go. And that metallurgical study that we're doing, for instance, I think it will be all set all the way up to bankable feasibility.
Right, okay.
I've chatted to the guys and I said, well, do we have to do a pilot plant? They said, no. It's so much data, so much certainty in what we've got there that you'll be fine with that. So that's really positive for us.
It's fantastic. Gilbert, I'm going to wrap it up there, because you've got to get back next door, shake a few hands, shake a bit of flesh.
Get some people getting into the market, buying the equities.
Absolutely. Yeah. Great to see what you've done so far this year, and I'm very excited to see what you can do in a more positive gold environment next year. So, resource first half, PEA by end of the year.
Yeah, that's our schedule. Get in there, get it done.
Good man.
Thanks again, Matt.